You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 26th of March, 2018. We see the S&P 500 nose diving for the week along with the NASDAQ 100, as we affectionately call it, the Qs. We see TLT 20-year bonds moving up for the week, and we see gold moving up for the week. We're going to jump into these here for a few minutes. We appreciate you being with us. We're also going to be sending out an alert for a weekly vertical crossover. We'll get to that when we get to it. Let's jump into the S&P 500 first for the day on Friday, down 2.14%, a big red down candle. Not as big as the big candle back on the week ending the 9th of February, but not too far off. Again, the 9th of February sent shudders throughout the market, sort of kicked the cinder blocks out of the foundation. Things then tried to move up and ran sideways for about 4 weeks, popped up over the course on the prior week ending the 16th of March, and then things really tumbled over. We sort of have a hockey stick as far as our price percent oscillator goes, going down, a long wick on the bottom, a solid red down candle price movement well below the weekly trend line and below the 2-day trend line. Now let's take a look at the 2-day chart. What do we see? We have 3 strong down candles. This latest candle, we're waiting for it to finish drawing today. It did. Big down candle representing, again, that 2.14% movement along with the prior down movement on the day before. And of course, we had the 2-day crossover back on the 19th. That is the 2-day chart ending the 19th. Derivative oscillators negative. Price percent oscillators kicked over even further down. We look at the 4-hour chart. What do we see? Well, we saw the chart slide sideways, a couple of up candles, and then rotated over strong on the 4-hour chart. We had, of course, seen things peak over on the 2-hour chart. Some of you all ask about that, looking in for jumping in points, and of course that did provide one. We don't use the 2-day candle the 2-hour candle, forgive me, a whole lot, but we are happy to try to use it when it will work for us and help us find good jumping in points. We don't want to catch a falling knife, but we have seen finally, after a big sideways slide, a little bit of up movement, we've seen the S&P 500 rotate over strong, going down, something we thought would probably happen. And of course, it has now. What's going on with the Qs? The NASDAQ 100, well, of course, it had a big down week back on the 9th, also back in February. But then it, unlike the S&P 500 sliding sideways and only up over the prior week, it actually tracked up every week since then and went much higher than it had started its down move on that week ending the 9th of February. But we saw it in the week also down strong with a down candle. It had peaked over 2 weeks prior on the 9th of March and had moved up for the week ending the 16th on our Heikin-Ashi candlesticks, but then rotated over strong, going down. And in fact, the derivative oscillator moving down strongly, price percent oscillator, strong red down candle with a long wick. Again, not quite as big as the down movement back on the 9th of February, but still strong down movement. We look at the 2-day chart. What do we see? Well, of course, it crossed over back on the 21st. Price movement well below the 2-day trend line. Again, tracking down strongly with the derivative oscillator, the price percent oscillator. We look at the 4-hour chart. What do we see? Well, it tracked sideways also, and then, of course, dropped off the deep end over the last 2 days. Of course, we take a look at that 2-hour chart, and again, it did bump up against the red signal line back on the both the afternoon candles on Wednesday, and then started tracking down strong on Thursday and Friday. So again, we do see things have finally blown out and really started moving over strongly down. That is where we are on the Qs and the S&P 500. We do have a weekly vertical crossover going down. So what do you do with that? You look at the charts on Monday around 10:30 or the noon chart, whichever one. If you want to do the 4-hour chart, make sure that it's still tracking down. You can look at that at noon for the morning candle, or you can check out the market around 10:30 on the 30-minute chart. Make sure that the market is actually still moving down. If it's recovering strongly, then of course you don't want to jump in. If the market's moving up, you might again continue to check it again at noon, see where things are, and maybe you can find a jumping in point. Typically, around the 10:30 hour is usually a good time to jump in. So check that out on the cues on Monday. Now, let's go to TLT, 20-year bonds. What do we see there? Well, it continues to look like things have floored out somewhere around about 118. We now have 2 weeks of up movement. Don't have a crossover going up yet, so there's no weekly vertical crossover, but we're waiting to see if and when that occurs. So we still are in a confirmed down move, but does appear to be getting weaker and weaker. 2-day chart, of course, rotated over back on the 5th of March going up, tracked sideways for a while, and over the last few days is meandering up. And again, one would expect that if stocks are going down. Bonds typically move inverse to stocks, right? They're a safe haven. When the market's not doing well, you look at bonds, and that's what we see going on right now, which is somewhat comforting. We want those kinds of things to occur, what we expect. What do we see on the 4-hour chart? Of course, it went down and hit, well, pretty much on that 50-period moving average and then bounced off of that and, of course, crossed over in the afternoon on Thursday. And again, bonds down just a little bit on Friday, 0.07%. That's where we're on the bonds, waiting to see how that's going to shape up and if it will indeed bottom out and give us a potential uptrend to get in. Don't have it yet. What's going on gold? Well, gold crossed over the course of the last week, going down. And with the stock market moving down, we can see that the week ended, in fact, gold up for the day on Friday, 1.29%. We ended up not with a red down candle, but with a green spinning top. And we see a long wick on the top, a long wick on the bottom. We see a green open box candle, again, showing you that strong movement within that very defined area. Getting close to crossing over, going up, hasn't done it yet. We will keep a close eye on that throughout the course of the coming week. The 2-day chart does appear at the end of the day to have crossed over going up. And again, that 2-day candle has finished drawing. We'll go ahead and move that 2-day candle over. The 2-day vertical crossover over. We will watch the market on Monday because that is subject to change. If it was a big down move on gold on Monday, then of course we could see that blue crossover pull right over and just bounce off, as we saw things pretty much back on the 16th of February. So we'll keep an eye on that 2-day candle on Monday as the week starts. What do we see on the 4-hour chart? Of course, crossed over strong in the morning on the 21st and then just kept blasting up. A little bit of a pullback in the afternoon on Friday. But again, we'll keep our eye on things and see what gold tells us. We like to see strong tracking in gold because that means, of course, that our price percent oscillator could start working again, but it's not been too friendly or reliable on that 4-hour chart since we've gotten out of the fall-winter trading zone. Remember, fall-winter trading zone, the best time to trade in the market as we get closer to May, sell in May and go away. As we get closer to that, markets will get more and more difficult to chart, typically. And again, we'll keep you posted. We'll follow it all the way along. Again, my friends, you have questions, problems, concerns. We love to hear from you at Charting Wealth, cw@chartingwealth.com. Thank you so much for making us in the top 10 of all podcasts when it comes to stock market, and the top 5. I think we're here to 3 or 4 when it comes to stock charting and stock trading. So thank you so much, my friends. God bless. All the best from the entire team here at Charting Wealth World Headquarters.